$15 trillion. And that's probably a conservative estimate of what just vanished from the global balance sheet between Friday morning and right now.
It is a harsh reality check.
You're listening to this and you think you have a portfolio, you think you have assets, gold bars, Bitcoin on a cold wallet, a diversified stock plan.
But the math doesn't lie.
The math from this weekend says those weren't stores of value, they were just measures of liquidity. And that liquidity, well, it just evaporated. The world of guaranteed safety isn't dying, it's already dead.
This is Neural Pulse. The date is February 2, 2026.
We are looking at a convergence today, a collision between financial volatility and kinetic warfare that really changes the rules for everyone.
We have a stack of intelligence to process: Federal Reserve data, diplomatic cables from Venezuela, Ukraine, cybersecurity forensics from Poland. But the through line is absolute. The safety net has been withdrawn. Let's analyze.
We have to start with the catalyst. The media is calling it a correction.
Which is a polite word for a slaughter.
Right. And this wasn't random. It was a specific reaction to a single name.
Kevin Warsh, President Trump's nomination for the next chair of the Federal Reserve. This single personnel decision triggered what we're classifying as the Warsh Shock.
And to get the violence of that reaction, you have to understand the man, what he represents.
Exactly. Because usually the market would love a Republican pick. They expect deregulation, tax cuts.
But Warsh is different. He's not a dove.
He's a hard money advocate, a vocal critic of the Fed put. And that term, the Fed put, is, well, it's critical to understand this. It's the bedrock assumption of the last 20 years of investing.
Let's just unpack that. For anyone who hears Fed put and thinks it's some kind of options trade.
Go ahead.
It's basically the idea that the central bank is like an indulgent parent. If the market drops too far, if the kids get hurt, the Fed steps in, it cuts rates, it prints money, and it saves the day. It's an implied insurance policy.
An insurance policy that made risk effectively free for 2 decades. If you gambled and won, you kept the profit. If you gambled and lost, the Fed just diluted the currency to bail you out.
And Kevin Warsh represents the end of that deal. He believes the margin has to stand on its own.
And on Monday, we saw the market try to stand.
And it immediately vomited.
The data supports that assessment. Violently. We saw a metals meltdown. Silver crashed 36% in a single trading session.
36%. I mean, that's historic. We haven't seen that kind of move since the Hunt brothers collapse in 1980.
And gold, which is supposed to be the ultimate safe haven, it saw just extreme volatility. It broke down to $4,400 before a chaotic bounce.
So this is what confuses people. If the world is ending, isn't gold supposed to go up? Why are people selling the lifeboats?
Because it wasn't about fundamentals. It was a forced liquidation, a margin call on the entire global system. When liquidity vanishes, you don't sell what you want to sell, you sell what you can sell.
And traders were leveraged to the hilt, borrowing money to buy gold, all assuming the dollar would keep getting debased forever.
So when the tide goes out, you see who's swimming naked. And it turns out everyone was leveraging their gold positions on that single assumption.
That the Fed put would be there. But Warsh signals a strong dollar, a scarce dollar.
Precisely. If the dollar stops losing value, the hedge against that, which is gold, it suddenly becomes a liability. The bond market confirms this fear even more aggressively. We are seeing a bear steepening of the yield curve.
I saw that term flashing everywhere this morning. Bear steepening. It sounds like jargon, but it dictates the interest rate on your credit card. So break it down.
A bear steepening is when long-term interest rates rise faster than short-term rates. The short end dropped a bit, as markets think Warsh might have to cut rates just to stop a total depression.
But the long end?
The 10-year Treasury yield, it spiked to 4.24%.
That's the bond vigilantes. They're back from the dead.
They are. The bond vigilantes are the big investors who punish governments for fiscal irresponsibility by just selling their bonds. They're saying, we don't trust the Fed to artificially suppress yields anymore. You want us to hold U.S. debt for 10 years. You're going to pay us the real price for that risk.
It's the financial equivalent of the police announcing they're no longer patrolling the bad neighborhoods.
And the gains move back in.
Right. And if you want to borrow money for a house, you now pay the real price, not the government-subsidized one.
And that removal of the liquidity safety net didn't just hit old-school assets. It exposed the fragility of the whole digital gold narrative.
Ah, Bitcoin. It failed to act as that uncorrelated hedge. It completely shattered that critical support level of $84,000.
Dropping to nearly $76,000. A bloodbath for the true believers.
I mean, the whole pitch was that Bitcoin is the exit ramp. The system crashes, Bitcoin goes to the moon.
But it traded just like a tech stock. just like any other risk asset. And again, it's about leverage. When money is free, you can borrow against your Bitcoin to buy more. When money becomes expensive, which Warsh signals, that leverage gets flushed.
We're seeing it with Strategy, the firm that was MicroStrategy. They're completely underwater on their holdings.
Their average purchase price is now higher than the market value. They are effectively a leveraged ETF facing a margin call.
Which brings us back to the core theme here. When the liquidity dries up, every single boat hits the rocks. Crypto, gold, stocks, they were all just floating on a sea of cheap money.
And Warsh just pulled the plug.
But here's the thing. While your portfolio was melting down, the geopolitical landscape was shifting just as violently, and the theme there is exactly the same.
The end of ideals.
And the rise of just raw, brutal
We're
transaction.
calling it transactional realism. The most glaring example is Venezuela. Over the weekend, the United States officially recognized Delcy Rodriguez as interim president.
Okay, let's just pause on that. The cynicism is just breathtaking. Delcy Rodriguez is Maduro's vice president. She's part of the regime the U.S. has condemned for years.
Meanwhile, Maria Corina Machado, the woman who actually won the popular support, the Nobel Prize winner, was completely bypassed.
Why?
Oil. It's that simple. The leaked details are explicit. Rodriguez grants amnesty to the regime, prevents a civil war, and she opens the door wide for U.S. oil companies, specifically Chevron.
So supply chain stability over democratic legitimacy.
Correct. It ensures oil flows to the U.S., keeping gas prices stable at home. They chose cheap oil over a messy democracy.
This is Neo-Westphalia. It's a return to a world where we don't care what you do inside your borders as long as the commodity flows. The U.S. government traded the Nobel winner for the dictator who controls the valves.
And we see a similar, maybe even bloodier calculation in Ukraine. The Abu Dhabi process talks are scheduled for this week.
So the diplomatic channel is technically open.
Yes, but on the ground, the conflict has escalated into pure industrial destruction. There were rumors of an energy truce, an agreement not to hit each other's power grids.
That was the hope, anyway.
Russia just shattered it. They launched a targeted drone attack in Dnipropetrovsk. But they didn't hit a tank. They didn't hit a radar station. They didn't even hit a power plant.
What did they hit?
They bombed a bus carrying workers to a D-Tech coal mine. 12 dead.
That's a qualitative shift. That isn't collateral damage.
No. It's the strategic targeting of human capital. They're no longer just targeting the machinery, they're targeting the people required to keep the lights on. They're destroying Ukraine's industrial capacity while sitting at a negotiating table.
It's cynical and it's effective. Russia's saying, we'll talk peace, but we'll make sure you have no economy left to save. It reinforces this new reality. Talks are cheap. Kinetic action is what matters.
And it's contagious, this instability. Even the so-called red monolith of China is showing cracks.
You usually think of Beijing as a black box of stability, but something is breaking there too.
A significant purge. Right at the top of the People's Liberation Army. We're talking about Zhang Yuxia and Liu Zhenli.
And explain who Zhang Yuxia is. He isn't just a general.
No, he is red nobility. His father fought alongside Xi Jinping's father. He is Xi's closest military ally, the one man who is supposed to be untouchable.
So if she is purging him for discipline violations...
It means the circle of trust has collapsed to a dot. It's like Caesar stabbing Antony.
And Liu Zhenli is the chief of joint staff. These are the guys with the nuclear keys.
Markets reacted immediately. Chinese markets fell 2.5%. The interpretation is paranoia, not strength. When a leader purges his own Praetorian Guard, it suggests serious internal dissent.
So let's recap the macro picture, because every piece is moving in the same direction. The Fed pulls the safety net on assets. The U.S. government sells out ideals for oil. Russia bombs workers during peace talks. China decapitates its own military.
The world is getting colder, harder, and much more dangerous.
And here's the part where most people tune out. They think, wow, the news is crazy, glad I'm not in Caracas or Kyiv.
They don't realize the chaos is already inside their house.
This is the critical shift. From the macro to the micro, the threat has moved to the edge.
And we have evidence from Poland that foreshadows a direct threat to your personal infrastructure.
We're talking about the lights going out.
And specifically, how they go out. We know about the Sandworm Group, affiliated with Russian intelligence. They hit Poland's power grid, but they didn't attack the large central power plants.
They went for the renewables.
They used DynaWiper malware to target distributed energy resources, wind farms, solar installations, all through their remote terminals.
And think about the irony of that. We've been told for years that decentralizing the grid makes it safer. Put solar on your roof, it's more resilient.
Sandworm just proved the inverse. By connecting millions of small devices to the grid, we've created millions of new backdoors. The edge is the new battlefield. It's infinitely harder to defend 1,000 cheap solar inverters than one guarded nuclear plant.
And this isn't just software. The supply chain itself is vulnerable.
Right. Look at Luxshare, a key supplier for Apple. Hacked by Ransom House. Blueprints for unreleased devices just stolen.
So if you're listening and you have smart devices, solar panels, the battlefield isn't over there anymore. The enemy is already inside the wire.
And this connects directly back to your financial survival. The Warsh Shock isn't a Wall Street problem. If the Fed stops manipulating long-term rates, the cost of capital for everyone rises immediately.
And that's the part that hurts. If the 10-year yield stays above 4%, mortgage rates aren't coming down to 3%. Ever again.
Which means the value of your house, which is priced on what people can afford monthly, has to come down. It's just simple math.
A negative wealth effect.
Exactly. Your portfolio's down, your home value is under pressure, and your debt just became structurally more expensive.
You're watching this like a movie about the global economy. It is not. It's a horror movie about your solvency. The institutions, the Fed, the treaties, the power company, they're all stepping back. They're signaling we cannot hold the line.
In Venezuela, risk was managed by selling out a Democrat. In finance, risk is being transferred from the central bank to your 401k. In energy, it's moved from the substation to your personal solar panel.
So here is the uncomfortable truth this deep dive has to leave you with. The era of outsourcing your survival is over. You have lived your entire life in a bubble where you could trust that if things got really bad, someone else would fix it.
The evidence from February 2nd, 2026, suggests that contract is now null and void.
The U.S. government sold out Venezuelan democracy for cheap oil. What makes you think they won't sell you out for stability? What makes you think they won't freeze your assets to stop a bank run?
What makes you think they can stop Sandworm from bricking your solar inverter in the middle of winter?
They cannot. The Fed put is gone. The energy truce is gone. The democratic ideal is gone. When the grid flickers and the bank account freezes, the only government left is you. You are the central bank of your family, the minister of defense for your home.
This raises the critical question. In a world of transactional realism, what do you have to trade?
Are you a victim waiting for a bailout that isn't coming? Are you just refreshing the screen, hoping the line goes back up? Or are you a warlord of your own life? The systems are failing. The vacuum is here.
The data is clear. The trend is down. The volatility is up.
Interpret the silence accordingly.
Neural pulse. Clarity in a complex world. Decide your move.